We need to talk about Fed Day, dot plot, Jerome Powell in front of a microphone. We also need to talk about PPI and the weekly unemployment claims. And then finally, we're going to start with a quote from Nicky Leaks. Yes, folks, Nick Timiraos from the Wall Street Journal. Nick is often rumored to be an inside mole or whatnot mouthpiece for the Fed. He's got the bat phone. And unfortunately, Nick had this statement today. There is a 35% chance that the Fed waits too long and they damage economic growth and financial stability. Frankly, the Fed has PTSD from their horrendous transitory call on inflation. Folks, I've been very clear. My expectations is for the Fed to cut in November and to cut by 50 basis points. Frankly, this is exactly what I believe Jerome Powell and team will do. They will cut late and they will cut aggressively. Let's answer the question about, hey, are we doing a new time? Absolutely not. What is happening here on the Daily Financial News is I am traveling with family. We are in the East or on the East Coast. So I am doing these daily financial news when it fits the family's schedule. Once we're back in town, we will go back to the 7:30 daily financial news. But I simply enjoy speaking with you guys too much. So when I can record these or do these live, I absolutely will. So hopefully you appreciate that. So yes, folks, I do think that the Fed has PTSD from their call around transitory. So much so, I saw a quote from the chief economist at Goldman Sachs that Jan Hatzius, something like that, also highlighted that the Fed has, his words, PTSD from their transitory mistakes. So again, folks, if you understand where the Fed has been and where the Fed has been wrong, you can start to get an inkling of where they go in the future. Let's talk about PPI first, which came out this morning. Obviously, yesterday was CPI. Yesterday was Fed Day, dot plot. We will spend a whole bunch of time on that. But folks, PPI, all kind of good news. Again, we talk about headline and core. We talk about month on month and year on year. So we will get to headline. Expectations for PPI headline were 2.5, came in at 2.2. So if you add on top of yesterday's 4 CPI readings all being better than expected, we are now 5.45. All right, folks, how about PPI headline month on month? Expectations were for an increase of 0.1. We got a negative number. We got a negative 0.2. We are now 6.46 with inflation readings. Okay. Now switch over to core. Core year on year was expected to be 2.4, came in at 2.3. Now we are 7.47. Could we possibly go 8 for 8? Well, core month on month was expected to be up 0.3. It was up 0.0. Folks, that is an 8 for 8. That is a clean sweep. That is perfection. Now, we won't get PCE for a couple of weeks, which will happen near the end of June. But yes, folks, it is certainly in Q2, inflation is looking to roll over. A lot of this was obviously energy and things of that nature. We obviously still have sticky shelter inflation. But yeah, we will get into that later. Also, let's talk about the weekly unemployment claims. 242. Folks, if you've been following this channel for any length of time, you know we've been stuck in the 210s to 220s, 225. This is the second noticeable spike. I think the first one was about 5 weeks ago. We did get a jump to 242. Expectations were 225. So a significant miss on the upside. Folks, this is going to become very important as we break down the Fed's dot plot, which I honestly think is already out of date. Again, the Fed gives us their thoughts on the future every 90 days. As we will go through in a minute, I think their dot plot is already garbage and should be redone. So we will talk about that in a minute. And then lastly, folks, yesterday morning we talked about mortgage rates going sub 7% yesterday or today, and it happened yesterday. Mortgage rates below 7%. Today's PPI reading being low, weekly unemployment claims being up. I suspect mortgage rates get better from here. Let's remember, I do believe that the magic number to unlock marginal demand is 6.7%. Nick Timmeros, again from the Wall Street Journal, a few weeks ago pointed out that mortgage rates have been above 6.7 for over a year. If, I am not saying we will, but I'm saying if we get to 6.7, it will be very, very interesting to see where the marginal demand comes back. And yes, folks, the dot plot is the Fed's prediction about the future economic, I forget what they call it, but yes, that often called the dot plot, which is just a bunch of dots on a chart over time. So Bureau of Economic, I forget what they call it. Summary of projections, that's what it is, summary of projections. So again, let's get into that. So when you look at the dot plot, we need to ask ourselves about four things: rates, GDP, unemployment, and there's one more. Rates, unemployment, inflation, core PCE. So there are four metrics. Let's get into them. First, rate cuts. What is the Fed thinking about rate cuts? Now, remember last quarter, they had 3 rate cuts in the projection, and no one was brave enough to go higher. Well, folks, now we are down to 1 rate cut in 2024. How that broke down. There was actually 4 Fed presidents that said 0 rate cuts. There were 7 that said 1, and there were 8 that said 2 rate cuts. Hence, the median is 1 rate cut. I do find it interesting that one Fed president, had no cuts in 24 and no cuts in 25. That is pretty interesting. But just like last quarter, no Fed president was brave enough to say we need to go higher. I thought Michelle Bowman might step up and be the first to do that, but alas, she did not. There's a lot of comments here. Let's go to inflation first, and then we'll get to some Powell comments, which I thought were very, very interesting. Let's go to PCE or GDP. We'll go to GDP. So again, GDP was expected to be 2% for the next several years. No meaningful change up or down. It was the one of the 4 metrics that didn't change from quarter to quarter. Again, 2% kind of trend growth. We will see if that holds. Unemployment. This is the one, folks. This is the one that I think the Fed got wrong. I just think they got it wrong. The Fed sees unemployment ending this year at 4%. Folks, if you recall from last week or the week before, we are already at 4%. Does anybody think I think we've increased 3 months in a row. Does anybody really think we're going to hold 4%? I do not think we are going to hold 4%. So I think that is wrong. They did see that in 2025, we would get to 4.2%. This is important. I think unemployment is what breaks and causes the Fed to overreact to kind of to my opening point. They will cut by 50 basis in November because they are late. And then they saw unemployment actually going down to 4.1% in 26. Does anybody really believe that? I mean, like, really? Do we really believe that unemployment's going to be 4 or 4.1% over the next 25, 26 months? I certainly do not believe that. All right, now let's talk about core PCE, aka inflation. They did increase PCE inflation from 2.6 to 2.8. Again, I think this is already outdated. I think if the Fed had a do-over, we would see vastly different numbers. Again, core PCE expected to go up to 2.8. Also expected to go up a little bit from 2.2 to 2.3 based on the last forecast. So at the end of the day, folks, I think the unemployment number is just wrong. I could see us easily getting to 4.2 this year and 4.5 next year. I think GDP kind of staying still at 2% is a wish. And then PCE, it's really interesting to look at core PCE because we might be seeing the final rollover in inflation, but more on that later. The other thing to look at yesterday is what is called super core. If you don't know what super core is, don't worry about it. It's kind of a new metric that people brought up because shelter inflation is such a lagging indicator. Super core, which is X shelter. So X food, X energy, X shelter. Super core came in at negative 0.04. Folks, if you don't know what that means everything other than shelter, food, and energy is deflating, not disinflation, right? We have inflation, disinflation, deflation. So we actually have deflation in the super core, which is pretty interesting. All right, let's get some Powell comments that I thought were important and I wanted to share with you. Number one, Powell is unclear why everyone is so gloomy on the U.S. economy. Well, I think that is very interesting because, again, if you're in Powell's position, it's like, hey, guys, we have 4% unemployment. We got inflation coming down. We got GDP growth. Shouldn't you be happy? Well, Jerome, all jobs aren't equal. We do have a bifurcated economy. We have asset owners getting rich and non-asset owners not. We also have a compounding effect of several years of runaway inflation. While real wages have finally turned positive, we do have a couple years to make up. Next one. This one's concerning. Jerome Powell threw the Economic Bureau and Labor Statistics under the bus. Quote, recent job data may be a bit overstated. Folks, that's the chairman of the Federal Reserve saying that our jobs numbers are overstated. He said that. Oh, conspiracy theories are going to go wild. Is it a conspiracy theory when it's proven right? I don't know. How about this one? How about this comment from the Fed president, the chairman? The Fed is not confident in their projections. So again, the dot plot, they were asked to give their opinions. Jerome Powell is basically saying, we do not have high confidence in our forecast. Are you freaking kidding me? You guys are in charge and you don't have confidence in your forecasts? Folks, I think their forecast, if they had to do their forecast over next week, it would be vastly different. I think it's all kinds of wrong. They're looking in the rearview mirror and not out the windshield. This should get interesting. So again, lots of stuff going on. The other thing I think is very interesting when you hear Powell talk in front of the presser, it's very clear. If unemployment breaks higher, they will cut. I think you and I have believed that for quite some time, but now it is, it's out there for the world to see. So basically what you and I are watching every Thursday, and again, remember Thursday's weekly claims went up to 242. We are not to be alarmed today. We are looking for a trend. We did see a spike about 5 weeks ago. So again, we will just be diligent and we will wait to see the numbers next week. So yes, very interesting. How about Redfin CEO? Redfin CEO says prices are going to fall in the second half. Redfin CEO says that home prices will fall 1% as owners finally break and start to sell. Some people just have to sell. His quote, sellers will cave to selling pressure. What does that mean? It means motivated sellers will lower prices. Folks, we've been talking about this for 45, 60 days. You and I want a slower housing market. You and I want inventory to build. Why? So we can write disrespectful offers and we can find sellers that have to sell. It is that simple. You make your money when you buy. Our time is coming. And he specifically says, if you are shopping in Florida or Texas, they are having major price cuts. Major price cuts. So folks, if your buy box includes parts of Florida or Texas, it is time to get greedy. Folks, at the end of the day, hope you're having an amazing day. I want to remind you to join our school community. Our school community now is in the top 1,400 schools, which is amazing. We started in the top 4,000. We are already in the top 1,400. $20 a month, you will get weekly calls with millionaires. You'll get monthly calls with me. You will get challenges and boot camps and all of that stuff for free. And if you're in the school community, you know already people are sharing deals, offers, asking questions, because again, the thing that I like about school is we're going to react to what's happening right now. You can talk about deals. You can talk about whatever's going on in your business right now in a small group, and we will help you. Also, you will get access to a calendar. I think as of right now, the next scheduled is next Wednesday with Dion, the lazy landlord, talking about self-management at 5 o'clock. The lumberjack landlord is also going to do a session on self-management. Why? Frankly, because our school student said, hey, help me. I have questions about self-management. Folks, I hope you have an amazing day. Remember, mortgage rates below 7. Magic number is 6.7. PPI better than expected. We are 8 for 8 for PPI and CPI. Let's see what happens with PCE. And then finally, of course, Redfin CEO saying home prices will fall. Have an amazing day. Take care of yourself. Later.